Now guys, we have come to the closing power panel of the STARS Digital Financing Conference. This panel discussion consists of a powerful lineup of international DeFi, blockchain, and cryptocurrency thought leaders and subject matter experts who are dialing in from Singapore, Switzerland, Taiwan, and Malaysia. Our first guest has over a decade of experience in energy, technology, and entrepreneurship. Luc Jaudet is a part of the Ariane founding team, where he is well positioned to seamlessly blend both the technology and the business side of the equation to transform global digital standards for brands to benefit consumers with augmented ownership. Our second guest is the co-founder of the world's leading independent cryptocurrency data aggregator. He is TM Lee of CoinGecko. Since 2014, CoinGecko has been the trusted source of information for millions of cryptocurrency investors. It currently tracks more than 7,000 tokens from more than 450 exchanges. Our third guest is a regular speaker at blockchain conferences. Peter DiMeo globally leads IBM Systems' confidential computing technology solutions for crypto assets that further secures institutional digital asset custody, exchange wallets, and tokenization of solutions. We are also very honored to have on this panel a crypto congressman, Jason Su, a former member of parliament in Taiwan. And among the crucial legislations he introduced and passed includes the Fintech Regulatory Sandbox Acts and a lot more. Jason is currently the Vice President of Taiwan Fintech Association. Lastly, joining the session is Anutosh of McKinsey and Company, who will be moderating the panel discussion. You might remember him from our first talk today. This is definitely the panel discussion that you do not want to miss, especially if you are sick of getting cryptocurrency information from the guy that invented Tesla. So remember guys, if you have any questions for the panel, please do take this opportunity to send in and ask the questions that you do have on cryptocurrency, and we will address it during the panel session. All right, so now this hot button panel is getting ready. So stay tuned and say it with me. We will be back shortly. Bye guys.
Okay, great. So welcome everybody to this panel discussion on the future of digital financing, enter DeFi. So quite a mouthful of a topic. In a nutshell, we're going to talk about DeFi in the context of digital financing. We've got a pretty esteemed panel. We can cover a fair amount of bases, but as with DeFi, time is always short and there's too much happening within that, so you have to bear with us a little bit. So the panel can bring in many different views from a fintech to a new business that's getting built, leveraging creators to legislation, lawmakers, technology, consulting, advisory. So lots of different perspectives are going to be brought in. But maybe I'll just get us started straight away on the topic at hand, and it's decentralized finance, which means we are disintermediating the existing financial participants, and in particular the banks. And maybe, I guess if I start, Peter, with you and sort of get your views on what do you think happens to the roles of banks as DeFi takes off? How does the role really change? If you can start us off there, please.
Okay, yeah, sure. Peter DeMeo with IBM. When I think about the banks, primarily what I do is to actually work with banks, particularly with key management and digital asset custody, infrastructure. So I do have an opportunity to talk to a lot of the largest banks. And in general, I think the mega banks, the State Street, the City banks, the Bank of New York Mellons, Deutsche Banks, all of these large institutions, they all have a digital asset plan. They all have strategies, and they're all executing. Generally, custody is the first thing out. But I think we've heard State Street announced, for example, they'll also be looking at ETFs and other kinds of products as well. The big question behind all of this, of course, is where does DeFi sit? And what's the benefit? Brian Brooks, who was the OCC chair in the previous administration, coined this term, or at least he popularized it, a self-driving bank. And I really, I really enjoyed that particular thing because it implied a number of things that, really aren't the case today. I mean, for example, just purely a smart contract driven, decentralized, organization without really any humans involved, right? So it changes the way that the banks work. For example, you can derive your interest rates based upon purely supply and demand algorithmically rather than, having some kind of committee set it or something to that effect. You can do exchanges without brokers, right? You can do lending without having loan officers or credit committees. You can have services around the clock. And quite frankly, in the era of inclusion, this also reduces opportunities for discrimination against borrowers when it comes to credit decisions. There is also, I think, with blockchain DLT technologies, an element of reduced risk and fraud because, quite frankly, there aren't any humans involved. And also, I think there's, generally speaking, a greater efficiency on how various operations can work. That being said, if you were to provide a license to, let's say, a decentralized autonomous organization, well, I don't think we can do that yet because there's no humans involved. Generally speaking, it's the bankers that actually you want to look after, and they're the ones receiving, the charter. So being able to license a smart contract is definitely something that we're looking forward to seeing happen at some point, right? But we're not there yet. So I think directionally, the benefits of a DAO structure, which, by the way, in Wyoming was just made into law, is definitely something that we should all be kind of looking at and looking forward to, quite frankly.
Got it. Okay. No, thanks for that, Peter, to get us started on the broad overview here. Maybe I can go to TN next because that's sort of the completely crypto native world that you bring in your perspectives on. How do you see the evolution so far from tokens to NFTs? Earlier on, we were talking about the whole identity as well coming into play. Can you just talk us through just briefly on how you see the evolution coming through, please?
Yeah, so thanks for this, TM, for CoinGecko. And basically, just trying to make it brief on the history of things. So I think when Bitcoin was launched about 10 years plus ago, the only way for you to trade this Bitcoin would be through a centralized marketplace. And this tends to be either some sort of P2P platforms or an exchange. And this exchange has been operating for about maybe 5 years or 6 years plus. They're sort of evolving into sort of like a bank, right? So they take custody of your Bitcoin and then they provide additional services like borrow lending, ability to earn a yield on your deposit, ability to trade, basically like financial services, right? And then later on when DeFi happened, suddenly you are able to do all these things without going through an exchange, right? You could borrow tokens from someone through a smart contract. You could provide liquidity to a pool, and then thereby people could then trade on that token pair, and then you could make a yield from the trading fees, right? So, but the thing about this is that it's really, really difficult for anyone to figure out, right? So not only you have to learn how to use the protocols, you have to figure out how to manage your keys, right? To make sure that your tokens are protected. So you can think of this as email, like before Gmail, before Hotmail, where you have to run your own servers and then you connect to the network to send email to people, you store your own emails. It's just really, really difficult and cumbersome. And going back to the question on banks, right? What would they be doing? I think they wouldn't be entirely disrupted, but they have to evolve their business model to a point that I think one area that they are good at is managing customers' funds and giving them trust to their customers, right? So they could act as an on-ramp services for regular people to start integrating with all these DeFi services, for example, to get a yield. Sure, they could use an exchange, but exchange do not have that same historical operational trust compared to a bank, right? So that's where I see it's going. Like it's heading towards a situation where regular people want to leverage on DeFi and get advantage of the yield and have more economic opportunity, but there needs to be some sort of on-ramp to get all these people on board into this platform. And yeah, so I think banks will be in a very good position to play that role.
Makes sense. Before we go to Jason, because he'll have a very good perspective across all of them, I wanted to touch on Luke at this point, because you bring in the whole sort of exciting creator economy to life in the context of DeFi. Maybe just give us your perspectives on how you see DeFi connecting in with the sort of realty economy in a way.
Yeah, of course. So yes, I'm co-founder of Ariani, and we create digital NFT-based digital identities, kind of like digital passports for luxury goods. It's already live with brands such as Breitling, with Marc Piguet, and other brands like Bash Mugler. And what's really interesting here is that, of course, this passport is a proof of authenticity and proof of ownership, but it's also like a gateway to bring physical products into the digital world. And here, where we see DeFi is what we're interested in a, let's say, medium term, because there's still quite a lot of things that needs to fall in place for it to happen. Is how can you actually use NFTs and those assets as collateral for loans, for instance, or how can you make them interact with DeFi? And here, the way we see DeFi is as a new brick into the different components that you can use to create experiences for users online when you start being able to bring those physical goods inside the virtual world. So of course, as I said, it's there's still quite a lot of aspects that are exploratory. But there are already some really interesting experiments that exist, like Realty and what they're doing with Aave. MakerDAO is also really interested in trying to figure out how to bring those physical assets into the virtual world. And so that's really where our perspective comes from is, how can we start bringing other things than just purely digital assets into DeFi? Because we really see it as a core component of that we can compose with and build with in the future.
Maybe Luke, just double clicking on that composability point, right? I mean, taking an example of a watch or some other collectible, can you just sort of explain where you see DeFi being beneficial? I mean, what parts of it can it enhance? What real world can it solve?
Yeah, absolutely. So especially in the watch industry, I mean, a big part of the story around watches is the idea that it's a reserve of value. It's actually it's not just a consumable; it's an asset. I mean, it's a big part of what luxury actually promises. Patek Philippe, for instance, always says you don't actually own a Patek Philippe; you merely hold it for the next generation. Here, the question would be, how can you actually tap those assets which are sitting idle, and for a lot of people actually are just sitting in a safe somewhere or at a custodian already? How could you actually tap some kind of financial assets out of it and use it as collateral for a loan? Is probably like the easiest way to actually show what could potentially be explored. Now, you could also imagine a bunch of other applications that have to do with yield generating assets, whether it's because you can. We talk a lot about physical products, physical luxury goods, but there are more and more digital luxury goods that are being built as well. And maybe there is a market that is there is a market that's building around the idea of digital skins or digital goods that are in game and can actually generate yield. Whether it's because you're renting a specific outfit for a special event on Fortnite or another metaverse, or I think Tim earlier was talking about some in-game assets, which is a bit further away from what we're doing, but some in-game assets such as Axie Infinities, so little creatures that are fighting and can generate yield by earning crypto. So there's plenty of different things to explore. As I said, the easiest for us today is to illustrate it, and the one that we're exploring more is how can you actually use your valuable assets as collateral for loans.
Got it. Okay, thanks for that. Maybe building on this conversation, Jason, very keen to get your perspective, especially how do you propagate innovation, right, and continue to drive innovation in the DeFi space as it comes through. And if you could talk about like the Fintech Sandbox that you've championed in the past, what have you seen as the waterfront of innovation here? Would be great to get your input.
Sure. So I was a tech entrepreneur before I become a politician. So I'm this rare animal that combines both policy and technology. So when I served in the parliament in Taiwan from 2016 and 2020, I made it a very strong focus that I want to bridge the gap between public policy and technology. And blockchain and crypto really becoming my main focus for my term as a legislator. And one of the first legislations that I worked on is the very first sandbox law in Asia, which we model after UK's sandbox law, which basically allows startups to work with big banking institutions without having to worry about legal liabilities. And fast forward to 2021, the whole crypto movement going from ICO to DeFi have really signaled a new wave of digital assets on the rise. Now, it's undeniable that countries around the world, particularly federal governments and central governments and international financial institutions, are looking at cryptocurrency in a different light today. Today, for example, China published their eRMB, which is basically their own digital money. And US is contemplating a digital dollar. And obviously, other countries are studying the possibility of doing their own CBDC. So it's really important that today's regulators catch up with technology and really understand what exactly is going on the field. And I think Luke had a really good point on the NFT, particularly on the digital asset and also the authentication or the proof of ownership. And I think this would spread across different spectrum, from the land property to the ownership of a certificate to your digital footprint. So the way I see it, right now I'm serving as the vice president of Taiwan Fintech Association. We are now looking at addressing a whole set of new asset class on the virtual world, going from the, your points that you collected from playing games, or how you trade and sell, buy and sell your cryptocurrencies. And all of these things are pushing the legacy finances institutions to rethink about their strategy in terms of how they reach out to millennials or the younger generations. How do today's people in their 20s, think about what they own and the stuff they own, or even how they think about money? It's not the physical banknotes anymore. It's your digital digits on your phone. How you trade your Bitcoin and how you even, get your buy and sell stuff. So I think there's a lot that we need to understand. And I think there's also a whole set of conversations need to be had between the industry, the regulators, and as well as the practitioners. And I want to add one more thing. I think the case in point this past week was the Ecuador. Really the kind of wayward president, the 40-year-old president announced that Bitcoin would be the legal tender for the country. And although, whether or not it's practical, it's still up in there. But I think you can see countries start to look in alternative ways to look at, finance or how the banking industries work. So I want to pause here.
Yeah, no, that's a very interesting point where you paused as well, Jason. But thank you for giving us the very, very broad overview and the cross-section across, policy as well as innovation at the same time. But you touched upon interoperability, and you touched a lot about technology and standards and platforms. Peter, maybe very briefly, I could come back to you and get a view on interoperability across the technology platforms. What does it mean in the context of DeFi?
Well, I think I would start.
I think it's important to know. Sorry, go ahead, Peter.
Sorry, Peter, you can go ahead. Thanks, mate.
Oh, was it directed to me? I'm sorry.
You can go ahead, Peter. It was directed.
Okay.
Yeah.
I think it today, of course, Ethereum is the gold standard for all of the DeFi platforms, and yet we're seeing a number of the other chains become more viable. And certainly, if you're a financial institution, you don't want to have a lock-in into any one particular chain. You want the ability for interoperability. And I think one of the defining elements of DeFi is composability, in the sense that you're able to, be through API, loosely coupled APIs, create a whole set of financial products, on top of, yield farming is a great example, right, of different services. and then being able to make that work fast, and easier, like Polygon is doing on top of Ethereum, and I guess Luke, you're working with those guys as well for that very reason, and being able to take your your handbag NFTs and be able to put them on Tezos or Algorand or whatever, right? Because at the end of the day, do you really care what chain it sits on top? It's really more about making sure that can travel, in a unique way, in a non-fungible way, as opposed to having copies someplace else. And quite frankly, even if you move out of DeFi for a second, central bank digital currencies is another area where this interoperability, cross-chain interoperability, let's say layer 3, applications, that's where they want to sit. They don't want to be dragged down into the protocol level, or even perhaps layer 2 for that matter. So I think directionally, as we see Ethereum 2 start to take hold, and the other chains becoming, let's see, more used more, I should say, for very popular applications like Uniswap, for example. If you look at the DeFi top 10 list, it's all Ethereum all the way down, right? But you can probably just imagine that you'll have various like Uniswap and Aave and so forth working on Tezos for that matter, right? So it's just a matter of time before we start to see cross-chain interoperability, and as well as being able to build applications that are taking advantage of that.
Got it. Thanks for that, Peter. Maybe building on that layering of DeFi, because it's a very important concept to also get your head across. But maybe TM, sort of going back, I mean, I'm going to do one more round robin here, unfortunately, but going to you. When you think about the sort of explosion of tokens that's happening in the crypto world and DeFi more sort of specifically, how do you think of as an exchange, through which ones do you list, and what criteria do you put on them? How do you find them? What role do you play in that? So it's a pretty broad question, but if you could give us some perspectives on it, please. We can't hear you, TM.
Yeah, sorry about that. So what we do at CoinGecko is basically we try to aggregate tokens, right? So wherever they are traded anywhere, we try to aggregate them. So we're not really an exchange where sort of a due diligence required to ensure that our customers are protected and whatnot. We're basically an information provider, and we want to cover as much as we can. So maybe I can just talk a little bit about how exchanges do their listing process, right? So typically in the past, before DeFi, the exchange is the only avenue projects or tokens can get a market going with some sort of liquidity. So you can imagine exchanges could be those that are regulated, which are more stringent with their rules. You want to ensure that tokens are not securities. You want to ensure that the project is a legitimate one, is run by people that they know. They can identify who are the team members. And there are some exchanges that are a little bit more, free for all, where they just list whatever token as long as the listing fee. And then you can imagine listing fee can then go up to as high as 50 BTC or whatever when the market is hot, right? But then when DeFi happened, it sort of democratized the whole listing processes. You don't really need to go to an exchange to create a market, right? You could just create a liquidity pool, and then people could just trade on top of that. So that power itself has created hundreds and hundreds of new token projects, ranging from all kinds of weird tokens to legitimate projects that they're right now not beholden to the centralized exchange to charge them a fee, and you can then start to innovate with all kinds of different ways to test different ideas and see which one really, really works. And that has opened up a lot of possibilities. So I think for us at CoinGecko, basically looking at all the tokens that's being going to the market, obviously there's going to be some really, really strange ones that survive for only 1 to 2 weeks because of some experimentation that they're working on. And for us, we really look at the liquidity that goes into the pool. Are the distribution of tokens distributed enough? Does it survive the test of time? Can we identify who are the team members? So I think very, very standard due diligence that anyone would do when you are trying to identify another party. I think this is something that everyone will have to do in this space because it's so trustless and decentralized that you have to do your own due diligence to ensure that you don't get fall for the wrong trap. So every time, I like to tell people that whenever you read something in this space, always put on a skeptical mind, because a skeptical cap, because whatever that you see on paper may not actually be the way it is in this.
Makes sense. I mean, amongst the discussion that we've had so far, we've touched on a lot of things. One of the things we haven't gone into is users. And Luke, I wanted to go back to you for that. I mean, you had a very good perspective on in the context of NFTs that you're operating in, where the users are based, where the sort of who you're connecting them with. Any color that you can provide, especially given we're based in Asia, the users from Asia?
Yeah, so I think that we started 4 years ago, and especially with the market the type of market we're targeting, the luxury and fashion industry, a big part of this, it's not necessarily a crypto first or crypto native customer base. And so a big part of what we're working on and what we work on constantly with brands is how to create experiences where the kind of crypto keys and crypto, how do you keep custody of your keys is facilitated and really is almost to a certain level hidden by the interface. However, an important part of what we're building is to always enable, the super user that is crypto native to actually hold their keys if they'd like to, and not have to rely on a custodian. But definitely, I mean, Breitling has several hundreds of thousands of customers that hold our certificates now. Same thing for Bash and a bunch of other brands that we work with, and an overwhelming majority are not doing self custody of their keys, or at least they're following all the instructions that we have pushed onto them as to how to manage their keys. And so and they don't necessarily understand what we mean by by private keys. So we do need to have because of we're looking at this customer base that is not crypto first or crypto native. We do have to create interfaces that facilitate and to a certain extent centralized interfaces that facilitates the access and custody of keys and usage of crypto. Now, to us, that does not mean that DeFi, which is as it was described earlier by Team or Peter and Jason, as a purely peer-to-peer infrastructure when you're in full control, is not something interesting for us, because it's still something where application builders and application developers can actually go tap into those bricks and build experiences, build services that are themselves much easier to build, because you do not have either a bank or a gatekeeper, let's say, in the middle. So that's how we see DeFi as much more of a developer tool that enables easy integration with what we're building, more than a fully zero custody future for the customers of the brands we work with.
Got it. Brilliant. I mean, we're talking about decentralized finance, and we have a moderator moderating this very amazing group. So I think I'll let you self-moderate anyway. But I think one of the things I wanted to get the group's view, and anyone can please answer that, would be, what's the key unlock that you think is required for DeFi to grow? Maybe it would be good to get your thoughts, and I would stop moderating from here on in so we can self-moderate.
So the keys to unlock, you mean?
So key unlocks for scaling, basically. Like what is
of course. Maybe I'll talk. I mean, I'll just to continue on my point, and then I'll move to Peter or for what banks are, what banks can be useful, and then maybe Jason on the regulation side, maybe a little bit. For us, it's easy interfaces. The main thing is it's still difficult to for a non crypto savvy person to actually access a lot of those tools. There are some applications starting to do a good job at facilitating this, and I know this is something that we try to do and that's what we do on a daily basis, is how to really make it much easier for a new generation of crypto users that are not crypto natives. But to me, that's the big key to unlock, and there's not going to be a revolution next 6 months. It's going to be evolution, and improvement over the months and years and probably decades coming.
Well, I think for me, as a regulator and as someone who's been also in the tech and government. I think the most important thing is the educational aspect of the cryptocurrency. I think that what we are seeing is a lack of the mainstream use case for the cryptocurrency. And obviously, I would say NFT would be a real good anchor to start with, because it's something that a lot of young people can associate with. And the whole boom of the creators economy really give rise to how fans and or the younger generations contributed to something they passionately love. So I would say, as a regulator or as a government official, we need to look at what the future generation is thinking about, how they view the entire economic system and how they strive to be a part of it. And I think for a long time, people are struggling to understand what Bitcoin is, except to see the ups and downs of the price, or someone, tweeted something on the and then the price went crazy. But I think what we need to see at this point in time is to really have something that is solid, like an NFT, and really develop use cases that can follow through. So I think we start to see it, and we start to see the wider applications in different fields, in esports, in the actual sports, in the luxury goods, in the ownership of certificates. So I really see it as really the genesis of the cryptocurrency coming into mainstream via the vehicle of NFT. So I feel that this right now is important, and the government and officials and the industries should begin the conversations as early as possible in terms of how to bring this to a mainstream.
Yeah, just to add on to that, I think 2021 is a pretty key year. Maybe because of the pandemic or what, I'm not too sure, that got people to expedite to get into digital and technology. But we have seen with at the rise of NFT, right? It's like a gateway drug to get people into crypto. Like initially, you tell people about Bitcoin, you tell people about Ethereum, they don't really get it. But when you tell them about NFT, about collectibles, collectible cards, trading cards, game items, they start to tick, right? And then that could be one way they get into crypto. So that's the first part, right? And the second one is Ethereum. It doesn't scale, right? Like you can only do a limited number of transactions every given minute, and that of course increases the transaction fee to a point that I remember it takes like maybe $50 to make a swap on the DEX, on the decentralized exchange, and that completely pushes out all the regular users out from the space. So now with all the scaling layer 2, like new blockchains, dedicated blockchains that are created to process more transactions or to be built to serve a certain purpose, like game items transaction and stuff like that, all would open up the possibility for more and more people to participate in this economy. So I think this year is a key year in terms of turning point to get adoption of the mass into crypto. And it will be much more interesting in years to come as all this technology gets more mature and people start to get more comfortable working with digital assets that they control themselves.
Yeah, I might add on that. In my daughter created an NFT, and she did it at the height, and so she paid $100 in gas, unfortunately. And she's of the younger generation, Gen Z or whatever they are. And you think about kind of getting back to the original thought here with the banks. She does not have a bank account, right? She is of the generation that may never have a bank account. They might just sign up for Venmo and do crypto transactions and everything on their phone and not even know what a private key is, right? Meanwhile, you have like the banks where basically I think the adoption, quite frankly, they're starting off very slow. They're starting with stable coins, internal stablecoin networks, basically following some kind of fiat-based analog with respect to adoption because it's regulatory compliant. So the banks are going to be like, they're not going to be an NFT land anytime soon, right? At least the big ones. And then you have all of these others, mostly payment services companies, right? That will be able to then interface with like OpenSea, Nifty Gateway, whatever other NFT platforms. And in my mind, that's where a lot of this action, at least the NFT side of things, is going to be happening is on those kind of platforms, and then competitive banks like Kraken becoming a bank, and custodians becoming OCC regulated banks like Anchorage and so forth. So it's going to be really interesting, and how NFTs are really driving a lot of this, because people want, my daughter's generation, they want this stuff. Yeah, they don't know anything about self-custody. They don't know what a private key is. They don't care, and it's the same generation that, quite frankly, gives away their privacy anyway. Not trying to equate privacy and a private key, however. So we definitely need to, I think, as a community, figure that one out, right? Like, how do you have all your NFTs sitting in your trust wallet on your phone, right? And then what? When you lose your phone or you get stolen or whatever, you get another one, and it's like, how do you manage that, right? I think that's really, when it boils down to it, it's key management. It's a key management problem. And how do you solve that at a massive scale where you don't actually have to worry about it? That's one of the things I'll be following. I think that's a real interesting area.
And I'll just add that your daughter is really not alone. I mean, I've been in crypto for 5 years now. It was really difficult to get my wife interested in buying just Ethereum or Bitcoin, but for the last 6 months, NFT is the only thing she talks about. She loves art. She loves this entire aspect, and it all of a sudden it made sense. It's like even more than what I've been doing for the last 4 years. And so it's and she's slightly older than your daughter. She's more of a millennial generation, but it really is something where I really felt it, where it was a clear proof that right now is something really important is happening. People are starting to make sense of what crypto actually is, thanks to NFT.
Yeah, I think it also really shows a bottom-up movement. I think when government try to crack down on crypto and try to figure out a set of rules to govern them, but then the fact is that it's the users that really is taking the control. And when government come up with a really complicated regulations, then which makes business really not viable. But I think when it comes to user-generated economy, user-empowered actions, and I think NFT is really at the forefront of what will really drive the crypto to the mainstream. So I'm really hopeful, and I think we can really bestow our hope to the next generation, since they understand it and they grow up in it. They are the natives.
Okay, I think we are probably at the end of our time. I think some of us have to go. So I will just say thanks everybody for allowing me to have this conversation with you, and it's been really illuminating a lot of different topics. And I think DeFi it's going to be DeFi summer too, right? We're coming up. what's the next sushi swap? The vampire attack. Where's all that? Hopefully not, but actually, quite frankly, that particular episode actually added a lot of value, right? Because I think Uniswap then created a governance token, and the whole process, the whole ecosystem, and it was better for it. So it'll be really interesting to see how things transpire this year. So guys, thanks so much for allowing me to join you today. I guess I'll just ask if anyone had any final words. I'll go to the left. TM, do you want to have anything you want to close with?
Yeah, nothing too much. I mean, for those of you who are curious about crypto or DeFi, the best place to start is like educating yourself, learning about it, know what are the risks, and then because knowledge will compound over time as this space gets more and more complex, and it will always stay with you at all times. So never too late to keep learning about DeFi and crypto. Yeah.
Great. And then Lucas, let's just go. Let's some final thoughts,
course.
and then we'll close out.
Right. I'd second what TM said. It's never too late to come in. There's always more things. You're still really early in here. There is also, I would say, there's also more than just DeFi, and I mean, we've actually shown it today, talking about NFTs quite a lot. The financial aspect of crypto is an important one. It's something that brings a lot of value, but there is really a lot of other things that are being built in there. And if you don't find if you don't find really interest in DeFi itself, there are other things to explore. There's gaming there's on-chain gaming. There is, of course, the NFT art scene is quite interesting, and a bunch of different creator coins with how can you support great communities around influencers or artists. There's really a lot of things to look into, and I encourage anybody to go explore and start learning. And really, you're not late. Come join us.
Yeah.
Jason?
So I think that we've come to an era where we start to really rethink what money is and how money works. And I think that money used to command authority, money used to command power, but it's also liberating to think that we are able to send money from A to B without having to go through a middleman or intermediary. And I think NFT is powerful in that sense that we know we have the ownership to something that will rise their value over time. And also we are able to transact at our own will. So I think this will give the whole generations of new ideas for creating new businesses and also creating a new set of economic ecosystem. So I'm quite hopeful that governments also need to evolve and transform to learn about how the virtual world works and what exactly is going on in terms of people who are looking at the future trends of the digitalization. And certainly COVID has propelled us to move even faster. So now it's never too late, and it's important to look at some of the applications and also to understand it also from the pure concept of what money is point of view.
Very good, thank you. So I want to thank also the Star Media Group for having us here today and getting us all together. It's been a really good session, and I think with that we'll go ahead and conclude. So thank you very much, and enjoy the rest of your day.
Thank you.
Thank
Bye-bye.
you.
Bye-bye.
Thank you.